Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Taking a look at some of the shipping sector, we've got DRYS ESEA and SINO on the daily and weekly time frame. So a very bearish week for the sector. We see it across all of these names. DRYS had the gap down open, close at the low of the day, continuation the next day, close at the low. The bulls are trying to form a higher low. Our all-time low down here is 197. We know the bears are very much in control of this long-term downtrend. I don't anticipate, or I don't suggest, I should say, trying to play this name to the upside with the very limited upside potential that we have seen in the past couple of months. Certainly those that are shorting any bounces are doing way better than anybody trying to buy the bounces and get those oversold bounce gains. So we have that low of 197, and right now we're forming support at 214, a double bottom at the last 2 days. So if 214 can hold, we will see a short-term bounce here. I've got resistance at 243, 250, and then up to 3 psychological resistance. If we cannot break 214, we're heading down to 197, and the absolute last thing that the bulls want to see is a break of 197, because then we are at all-time lows, have yet to find a support level, and this bounce was just another lower high in a long-term drawn-out downtrend. ESEA, same 4-day dump, and we had that low back here of 135 must hold support, and we broke that level, although we did close above it. So that support is still intact, but we did dip down to 130. So the bulls are barely clinging on here. Look at this weekly chart rejecting from this middle Bollinger Band resistance. 1, 2, 3, 4, 5 rejections in the past few months, and a leg to the downside. We've got 135 as that level, and if we break 135, we are looking down at 104. And 135 was actually a double bottom, the low of mid-November, the low of mid-December, and the bulls just closing above it this week, but we're not done testing that support level. SINO had that very bullish break, and it had very little follow-through. The only thing for the bulls is the fact that we've been seeing decreasing volume. It's very low volume, but obviously this sector weakness is not helping this pullback. Bulls must hold. The must-hold level is down here at 245, but we also have support at 261, and we bounced off of 263 on Friday. So we don't have a clear bullish reversal candlestick yet. We need to be patient and wait for this bullish reversal candlestick in order for a bounce and looking to maintain this higher low pattern. We did close just above the 100-day moving average of 267. We need to see the bulls close above this level again with a bullish reversal candlestick on Tuesday in order to be looking to the upside. Otherwise, we just patiently wait, let the bears do their thing, as there is no sign of the bulls right now. We did reject from that upper Bollinger Band on the weekly, and this is the first close below the weekly middle Bollinger Band of 276 in the past few months as well. So that is another red flag for the bulls. The entire sector being hit here. We're seeing it show up on the charts with this bearish action, and really this entire sector has been one big bear fest. Most of these names, again, SINO is very clearly the strongest on the weekly time frame, as it has been in an uptrend for more than a year now. And you compare it to SINO and the weekly chart for DRY, or I should say you compare it to ESEA and DRYS on the weekly chart, it's very clearly a completely different story with the bears in full control. So again, if you're playing these names to the upside, you need to be cautious. You need to have your game plan established and your stop losses in place, because I cannot tell you how many tens of thousands of people are currently holding bags of bearish positions in these names because they didn't set stop losses and they said, oh, it'll go up. It can't keep going down forever, and it has been going down forever. So we'll keep checking back in, but as of right now, the sector is bear heaven. I appreciate you watching, and I hope you have a great rest of your weekend.